that the Aurora branch and other Toronto HSBC branches have issued at least $500 million in questionable Chinese income loans since 2015. Hey, what's going on, everyone? It's Griffin here, and boy, do we have a story to talk about today. Now, this is information that came out in an article initially published on thebureau.news around a week ago at this point, but I was traveling abroad, so I couldn't get a video out until today. So here we are, and if you're interested in reading the original article for yourself, I'll leave a link down below in this video's description as well. Now, as the title of this video and intro have prefaced, there has been a whistleblower actually at HSBC Bank that's leaked information about fake Chinese income to qualify for Canadian mortgages, effectively fueling or at the very least contributing to the Toronto real estate bubble. At least that's what this article is claiming. Now, this is also of course a headline to incite emotion and viewer interest, so whether or not bubble is an appropriate term to use here is of course a matter of opinion. But nevertheless, there is no denying that most Canadian cities, Toronto very much included, are facing housing shortages, which have led to higher than ever price points for property and unaffordability. In fact, we've covered this extensively on the channel, and Canada is not in a good position at all to restore housing affordability by 2030. And in the meantime, we're dealing with issues such as what today's video is about that are definitely further contributing to housing issues in this country. So let's get into it. And before we start though, if you could leave this video a like and subscribe to my channel for more Canadian finance content, that is all I ask in return. So with that said, let's get into the article and see what's going on here. All right, so the article reads as follows. The headline being fake Chinese income mortgages fuel Toronto real estate bubble, HSBC Bank leaks. Now, starting off in the article, it says the whistleblower, a Canadian business school graduate, so a relatively young individual here, was staggered by the suspicious home loans he discovered back in 2022 when he joined a mortgage approval team in a small HSBC branch. Moving further, it says when he arrived at HSBC's bank in Aurora, which is a suburb north of Toronto, he discovered explosive growth in home loans to Chinese diaspora buyers during the COVID-19 pandemic. Chinese migrants living across Toronto were obtaining mortgages from HSBC while supposedly earning extravagant salaries from remote work jobs over in China. In one example, an Ontario casino worker that owned 3 homes also claimed to earn $345,000 in 2020 by analyzing data remotely for a Beijing company. So definitely some red flags right off the bat. Before joining HSBC Canada, the whistleblower had studied fake income mortgage frauds for his master's degree at the Vancouver University. And then while digging into the branch's loans books and interrogating his colleagues, he made mind-blowing assessments. Since 2015, the whistleblower concluded more than 10 Toronto area HSBC branches had issued out at least $500 million in home loans to diaspora buyers claiming exaggerated income or non-existent jobs in China. So essentially, mortgage fraud is what we're looking at here. And this is pretty crazy considering the fact that in Canada, mortgages are supposed to be issued out based on a relatively strict criteria that banks and lenders have to follow in order to approve a lender and to ensure that they're not giving out loans to people who aren't able to pay them back in an appropriate manner with sufficient income. And so this generally requires pay stubs, proof of income, proof of employment, as well as usually 2 years of tax returns for your T1, as well as even your provincial return if that applies in your province. And so if these HSBC branches were issuing out loans to individuals without any of this information and financial qualifications, well, of course, this is a complete red flag and completely unacceptable, as this defeats the purpose of having regulations in the first place. Back to the article, it says these foreign income scams spiked during the pandemic, the whistleblower believed, because borrowers could somewhat plausibly claim to be working remotely in other countries while riding out COVID-19 in Canada. And while a small bank of Aurora size is expected usually to issue out about $23 million in residential loans every single year, well, this branch had shoveled out $88 million in mortgages in 2020 alone, according million to the individual and over 50 million in 2021. So the fact that this didn't raise any alarms could be justified by, the crazy market and way more transactions during that period, fair enough. But in retrospect, this still should have been looked into further and with more care, considering the fact that, in 2020 here, we're looking at 80 million versus 23 million. So more than 4 times the amount of typical loan issuances in this branch during that period. Now, moving further here in the article, it just essentially says that this individual sent information, or emails at least, out to management to get information about what he had discovered. And then it goes on to give a quote here. It says, "I found out a huge mortgage fraud showing borrowers with exaggerated income from one specific country, China, pretending to be working remotely. And furthermore, I believe the housing prices in Toronto are linked to this because this is about income verification in banks, which is supposed to moderate demand." Now, this is quite true because in order to qualify for OPM, being other people's money in real estate lingo, especially bank loans that offer some of the best rates available for borrowing, to then be able to go ahead and acquire real estate, well, you need to qualify for these loans through showcasing your own income and other collateral that can be used up against a loan. So if you can't show enough income to cover a, say, $1 million mortgage debt, you shouldn't be able to get it in the first place, which would therefore limit demand, as most people aren't buying $1 million properties with just cash or with a 50% down payment even. But if you're able to just claim false income to get any loan you want, then not only is this mortgage fraud, pure and simple, but it also leads to higher price points as buyers are outbidding each other with boosted loans from, in this case, CIBC and HSBC. And to this very point, the individual says that there are thousands of these cases, large scale. The hardworking Canadians are denied mortgages, and these Chinese residents forge documents and get mortgages approved, heating up the already hot Ontario real estate market. These people don't have steady jobs or income in Canada, but what they are doing is scams to launder money and get mortgages using fake documents. Furthermore, this investigation suggests DM's calculation is plausible. DM, by the way, is the whistleblower, that the Aurora branch and other Toronto HSBC branches have issued at least $500 million in questionable Chinese income loans since 2015. So over the past 9 years at this point. Okay, now I think it should be noted at this point though that $500 million is a lot of money for sure, especially if issued out on accounts of falsified income. But I think it's important to compare this value to total Canadian real estate mortgage values. So as it stands as of Q3 2023, which is the latest data that we have at our disposal, there are around $1.8 trillion worth of mortgages across Canada, which makes sense because real estate is one of the largest stores of Canadian wealth. Now, where I'm going with this though is that $500 million worth of falsified loans, while a lot for sure, represents around 0.0003% of outstanding Canadian mortgage loans. And to hit home a bit more even, as this is mainly concentrated in the GTA area for this particular case, well, Toronto alone holds $419 billion worth of Canadian mortgage loans. So $500 million represents around 0.0012% of total mortgage loans in Toronto. So although this might be a testament to a large systemic issue in Canada for sure, to state that these values alone are linked to high real estate prices in Toronto, I think are a bit of a stretch. All right, now the rest of the article kind of talks more about money laundering and fraud in general in various different sectors, specifically also attributing it and linking it to this case in particular. So moving down in the article, it says that FinTrack's study doesn't say that Canadian banks knowingly issued fake income mortgages to Chinese diaspora buyers in Toronto, but in an interview with the whistleblower said banking staff are trained though to guard against fraud, and the loan application packages he received in Aurora beggared belief. The bank found out that one lady works in a casino part-time but got a $1.4 million mortgage showing over $300,000 in annual income. Plus, she takes money as benefits from the government for her 2 kids. That, of course doesn't add up. In other examples, an HSBC mortgage client claimed to earn 700 grand annually for remote work in China while simultaneously living in Canada and paying off a $10,000 student loan. So of course that raises red flags. And yeah, so in a file like this one, we of course didn't have all the pieces to the puzzle, just like by reading this article. But of course, a $1.4 million loan should never be approved for someone who works part-time at a casino claiming 300 grand in income. We're clearly looking at major professional negligence and most likely fraud in some manner as well. And this really reminds me of 2008 lending practices, where basically anyone claiming any form of income was able to go out and get approved for multiple loans on many residences. Now, continuing down here, it says the most shocking case reviewed by the Bureau shows that one woman that owns at least 4 properties in Toronto opened her HSBC Aurora bank account in 2013, claiming to be a homemaker with no annual income. But her Toronto account soon started receiving incredible amounts of wire transfers from HSBC China accounts and paid out high-value checks to third parties for real estate purchases. So of course, this just screams Chinese foreign buyer speculation on Canadian real estate prices and should first off never have been approved for a loan in the first place. If anything, these transactions should have been made in cash. Now, continuing down in the article here, they're going in and getting information and opinions from other individuals qualified in this sector. So Andy Yan, who's an academic from the Simon Fraser University, says that this goes to the core of our banking system here in Canada. And how are we verifying identities and how are we verifying incomes? And quite simply, based on all of this information, they're not. But I personally worked with many mortgage brokers who have refused loans, and we've had to go to even B lenders, for example, at much higher rates. Certainly not with an A lender bank like CIBC or HSBC. And this is even though some institutions do have more lenient lending policies on the internal level. Now, with all of this considered and comparing data sources in this story that is specific to the Toronto area with previous evidence confirmed in British Columbia's Cullen Commission, the Bureau estimates that from 2014 to 2023, so just under 10 years, well over $200 billion in Vancouver model and Toronto method funds could have poured through underground diaspora networks and Canadian financial institutions into Toronto and Vancouver's real estate. Now, this is a lot more alarming of a value. $200 billion would represent roughly 10% of Canadian real estate mortgages. And furthermore here, the official, who in this case is the RCMP individual who we're just speaking about, notes that other nations require tax agencies to verify incomes for mortgages, which is not the case in Canada. And that is true. In Canada, it's just the mortgage analysts at the bank essentially that look over the files and approve or reject applications. So the potential for mortgage fraud does increase in this case, and that would be an interesting regulation to impose moving forward on Canadian banks and other mortgage lenders. That being said, Canada makes everything overly expensive and bureaucratic, so if this were implemented, getting approved for a mortgage loan could take 6 months, as it already does for many commercial loans that need to get approved through the CMHC. All right, and finally for this article, as it is very long, I just wanted to highlight this last passage and give my thoughts on it. So it says that this is like the unspoken secret. I'm pretty sure other banks have it too. My aunt have no income and got a mortgage for $700,000. They just need a covenanter from China. Generally, in mortgage contracts, a covenanter takes responsibility for the loan if the primary borrower defaults. So yeah, this is pretty typical in most loans where individuals aren't deemed able to take on the loan fully themselves. You get a cosigner essentially. But in this case, if the bank isn't checking the records to the covenanter in China, well, it completely defeats the purpose in the first place. Now, the rest of the article goes on to identify and highlight specific cases of mortgages that are obviously fraudulent. I'll let you go and read these for yourself if you're interested. But the point here is that the Canadian banking system is only as good as the rules implemented and followed. We need to maintain standards to ensure that our economy and our housing market end up staying safe, but reckless behaviors such as this are stepping stones to larger financial issues that lead our country down the drain through crime, fraud, and corruption. Okay, now you're probably wondering though how the Liberal government's foreign buyer ban has impacted any of this, if at all. And to answer this question, we first need to look at the qualifications for this anyways. So although the foreign buyer ban generally stops people who are not citizens or permanent residents from buying certain types of properties, some exceptions do apply, which include the following. So non-residents married to a Canadian citizen, refugees and those with temporary resident status, diplomats and members of international organizations who do live in Canada, as well as people who have worked and filed tax returns in Canada for 3 out of the past 4 years before buying a property. And then finally, also international students who have spent most of the previous 5 years in the country. They can buy property up to $500,000. So these right here demonstrate a couple of ways though that criminals and those looking to buy can easily bypass this foreign buyer policy if they really wanted to anyways, especially if working in connection with mortgage lenders that are looking the other way as to their income provenance. Essentially, this is way more, in my view at least, as a political maneuver than anything meaningful at all to help the Canadian housing crisis. So there you have it. Make sure to drop a like on this video if you enjoyed the content. Thanks a lot for watching, and make sure to check out the other issues the Canadian real estate market is facing in these videos right here. And if you're interested in learning more about how you can start investing in real estate yourself, make sure to check out my course over on Udemy. That's always at a great price considering it has over 5 hours worth of video content and explaining to you everything I know about how I started investing in real estate. So thanks a lot for watching, and I'll see you in the next one.